Hi, good afternoon. Welcome to the Curveseries session. Thank you for taking time to join us today. We are very happy and honored to take part in the Digital Petroleum Week Singapore. My name is Chang Ching. You can call me CCC. I'm the founder of Curveseries, and I used to trade and analyze oil in various companies. This presentation is going to take about 20 to 25 minutes, and we'll have some time for our Q&A at the end. Some of my colleagues will take part in the chat later. Should you have any questions during the presentation, please feel free to text them and we will respond as we go along. So, what is Curveseries? Curveseries is an information platform that helps traders trade more successfully. And we also help analysts perform their jobs more efficiently and better. We provide time-adjusted historical OTC oil prices. We are one of the most customizable plot tools with the best-in-class forward curve charting. We provide real-time OTC oil prices as well. We are a one-stop shop for market data. And we also have an intuitive mobile app and Excel add-in. Also, I would like to highlight that we recently got certified for ISO 27001 for Information Security Management. There are many ways to trade oil. One of the methods that paper traders use is to look at relative values, basically trading spreads. It can be product cracks, arbitrages, cross products, time spreads, or even more complex strategies. A relatively simple way to trade spreads is to use mean reversion strategies. Why does this work? Simply because most spreads in oil trading is a form of margin. A crack spread is a form of refining margin, and east-west is an arbitrage margin, and a gas net is a form of blending or conversion margin. Because when the margins are too high or too low, refiners will adjust production to produce more higher margin products and ignore lower margin products. So basically, the supply and demand will adjust and the spreads should mean revert to range eventually. So mean reversion will largely work when trading spreads, and this allows trader to make money. Also, trading spreads is less risky since the oil products are highly correlated to each other. One of the greatest selling points of Curveseries is that we help traders look at relative values quickly and find opportunity. Now, let's zoom into how we can use Curveseries to understand relationships among different prices and trends. Let's again create another new dashboard. Let's call this relationships. Right, then let's start looking at some relationships among different trends. So we can create a new historical chart. So one of the relationships that may be something that people would like to understand will be, let's say, if you look at Brent Dubai. So let's say we chart something on Brent Dubai. So let's say we look at the first month Brent Dubai. And how does Brent Dubai actually correlate with maybe gasoline versus fuel oil? So let's say I want to understand the relationship between Brent Dubai versus gasoline versus fuel oil. Why do I want to do that? Because actually Brent Dubai is some sort of like a light heavy crude oil spread. So if we see whether there is some relationship between this Brent Dubai and fuel oil, we can actually understand how to trade Brent Dubai better, right? So let's choose. So we can choose dollars per barrel, maybe because Brent Dubai is in dollars per barrel, right? So maybe this is more representative. So you'll get two trends, and then you can save, and you'll get a chart. So one problem here is that the charts are of kind of quite different scale. You can actually right click on one of the legend and change it to a new axis. Then you may be able to see this some correlationship between when to buy and actually gasoline versus fuel oil. But maybe there is some sort of lead lag on this. So what you can do is you can actually edit the chart, right? Maybe I want to copy and paste the 92 versus fuel oil 380 equation. So now I have 3 trends, but the second and the third trend is the same. Let me edit the third equation, right? So I can actually use our plot tool with some of the functions like lead lag. So I can see that if we apply the lag on this gasoline versus fuel oil, we may see some more correlated timing. So you can actually do something like this. So you do a lag equation with 30 days of lag. So you can save. So now I have a 92 versus fuel oil, which is non-lag, and then one with it, which is lag. You can save it, right? Again, you can change the axis for the 92 versus fuel oil, which is lag, to the axis 2, right? So you can now see, actually, if I remove the original equation, you can see clearly how this Brent to buy actually correlate with the 92 fuel oil. So there could be a lead lag relationship with them, right? So you can actually find out some of the indicators yourself, right? So another relationship that may be interesting of late is if we look at the LNG versus Brent, say second month, because Brent doesn't have the first month for the futures, right? Because it's trading 2 months ahead. And then so if we do a LNG Brent, so this is JKM. Let's say we do it versus what I want to show is versus FEI Mock J, which is propane versus naphtha. Why do I want to try to observe this relationship? Because propane is largely produced from gas fuels like LNG, right? So that makes sense. And naphtha is mainly produced from refineries, which is closely related to Brent. So if we plot FEI Mock J against JKM versus Brent, so what do you think we will see in terms of the relationship? Let's save, right? So you'll see a chart like this. Of course, again, we can change the axis. So now actually you can see some correlationship as well, right? So there is again some lead lag relationship, but this one I will not go into more details, right? So the last relationship I want to maybe go through here is how we look at maybe freight, right? So let's say we look at the LPG freight, right? So LPG freight versus what we want to look at is maybe the propane east-west, right? So we can actually look at how the up versus freight looks like. So we can actually choose propane east-west, and then we can have again 2 trends. Actually, of course, you can have more trends, but so now this is actually quite correlated. You can see here, right? So so freight is largely correlated to the east-west or the arbitrage of some of the products. Why? Because it is kind of like landed price versus FOB price, and then there will be some correlation with freight, right? So with this, you can actually find opportunities like, for example, in 2016, when the Panama Canal expanded, we actually had a fall in freight rates, and then that will be driving a dive in in the east-west as well. So if you want to trade a proxy against something that is less liquid, so this can be something that you want to look for when you look at relationships. Next, I want to touch on understanding relationships. Understanding relationships of trends is important for traders or analysts to discover an edge in trading. If you are able to find a relationship in price action versus some trend, whether it's direct, inverse, or lead-lag relationships, it will help you set up indicators for market price action so that you can act faster than others in trading. However, there are some challenges in finding relationships. There's so much market data that is scattered everywhere in different platforms. It is also difficult to transform trends for better visualizations, or the data is unavailable. So, most of us would use Excel for this kind of work. There are a few limitations. Firstly, although you are probably able to pull data from different sources into Excel, you have problems aligning the frequency of data. For example, some data sets are daily, and some are weekly or monthly. Also, if you pull too much data into Excel, it may become slow. Secondly, it is still very troublesome to transform trends like removing noises, averaging, or lead lag. Lastly, Excel charting is not good enough. For example, it is not possible to switch views between seasonal and non-seasonal charts easily. It is very troublesome to plot range charts and zoom in zoom out. So Curveseries solved this by being a one-stop shop for market data and also as a powerful plot tool. Now let's zoom into how we can also use Curveseries to understand relationships among different prices and trends. Let's again create a new dashboard. Let's call this relationships. So now we can create a new historical chart. So now I'm going to show you how we can use Curveseries to look at those relationships. One of the relationships that I like to observe is looking at the light heavy spread. Let's say Brent to buy, right? So you can select Brent to buy using a spread query with a rolling first month, right? And then you look at the relationship of it versus let's say 92 versus fuel oil 380. Why? Because it is the light heavy spread that we want to look at, right? So this could be something interesting. So let's select 92 versus 380. Let's say in dollars per barrel, since Brent to buy is in dollars per barrel. So we can actually do a Brent to buy versus around 92 fuel oil 380. So you can actually now have two trends, right? So you can actually save and you can get the chart that you want to look at. So a small problem here is just because the axis has different range. So you can just highlight one of the legend and then you change it to a new axis, right? Over here you can see some positive relationship or direct relationship, but of course some of the times there's a breakdown. There's also some lead lag you can see like over here. So maybe you can actually copy and paste the 92 versus fuel oil equation again. So now I have three trends, but I have to edit the third equation, right? So I can use some of our plot tool functions like lead lag, right? So I can see that 92 versus fuel oil is leading. So we can actually do a lag of, let's say, 30 points, right? Then now we have a new trend which is lagging of the 92 versus fuel oil 380. So now you can actually have three trends on the same chart, right? So same thing, you need to change the new line to new axis. Sorry, actually we should change this to the new axis, right? And then so you can actually hide the original line and then see whether the lag relationship holds. So over here we can see actually it's quite okay, but of course I mean it's not perfect, right? So this is one of the relationships that you may want to monitor. Another thing is recently there is of late the LNG has been very strong, right? So maybe we can look at how LNG and Brent spread in terms of dollars per MMBTU. So we can say JKM versus Brent, right? But what do we want to look at versus so we can say FEI mob here. Why I want to look at this? Because FEI, which is propane, is typically produced from the gas fields, right? So if naphtha is produced from refineries, it has more correlation with Brent, while FEI has more correlationship with JKM, right? So if I look at this, I can create that FEI mob J in dollars per ton, and then maybe I can save, right? So I get this chart again. Same thing. We can change the axis again, right? So you also see some positive correlationship, right? Of course, it's not perfect. Maybe there's some lead lag over here. So sometimes the lead lag relationships may not be always perfect. Sometimes it's lagging less days than normal, but I mean this one everybody needs to find out their strategy, right? So another type of relationships that we can observe is about arbitrage versus the freight. So for example, let's say I look at the propane east-west, right? So when I look at propane east-west and then I look at the LPG freight, so are they correlated? So we can actually observe very quickly. So you can say plot something like this again, comparing two of the trends. So you can immediately see actually the correlation is quite high. So you can actually use propane east-west to trade the LPG freight in some ways if it's not too liquid, right? So for example, during the Panama Canal expansion, when freight rates collapse or expected to collapse, you can pre-sell east-west propane and then make money from that. Regardless of how many data sources you subscribe to, it will not be enough for thorough analysis if you are unable to use your own data. Curveseries understands that your data is proprietary and roll out a new data storage solution called Internal DB. What is Internal DB? Basically, you host a SQL server within your company network, which will be Curveseries ready. In other words, you will be able to upload your own time series or forward curves data to this SQL server, which is only visible to your employees. And you can then retrieve your data using the Curveseries platform, Curveseries Data API, or Curveseries Excel add-in. On top of that, your data will also work together with Curveseries data and other data sources like Bloomberg, Refinitiv, Quando, Wanta, Clipper Data, and Share Excel. It is very easy to set up, and through this, you will be able to complete your data strategy with your own data without worrying that the data will leave your company network. Next, I want to introduce our new product, Share Excel, which also works on Internal DB. Share Excel is an add-in that allows business users to use their Excel results in real time with their colleagues. Share Excel allows users to integrate all Excel tables everywhere into actionable insights. It streamlines workflow by showing shared data on mobile or PC, and it integrates with Curveseries for advanced dashboard charting. Later we will show you how. We will now close the presentation with a short demo on Share Excel. Finally, let's look at how Share Excel works. Everyone has some orders in their spreadsheets. For example, let's say I have this table, right? So, and I want to share with my team. So what I need to do is I just highlight the table, I create a new publications, right? So what I do is I click the new publication button on Share Excel ribbon. Then I find the folder that I want this table to reside on. And then I can give this table a name. So I call it DPW demo, right? The description is optional. So I just need to save this table. So you can see the mechanism is very easy. You just need to highlight and give it a name and save, right? So once you do that, you can just publish it, and then the data will be sent to a cloud repository or your internal database, your internal DB, right? So your colleagues then can create their subscription, so they can click the new subscription, and then they can search for what they want. So for example, DPW, right? And then they can choose the table they want to subscribe to. In addition, they can selectively choose what they want to subscribe or they do not want, right? So for example, I do not want the year 2019 and I do not want to look at the demand numbers. So I can save, right? So as a subscriber, I created a query in my spreadsheet. I subscribe once, the data will flow into my spreadsheet, right? So another very cool aspect of Share Excel is that you can actually live publish your model or your spreadsheet, and then your colleague can live subscribe, right? So when you do that, right, now I'm publishing and subscribing the same spreadsheet. So imagine my numbers start to change. Let's say this is a live spreadsheet, right? So the subscriber will also get the new updates on the publication as changes are made, right? So this is one interesting aspect of Share Excel. Another interesting aspect of Share Excel is that Share Excel is integrated with Curveseries platform, right? So you can actually create a new Share Excel data, right? Then you can search for what you want. So again, I search for DPW, so I can find the table that I want. So here I can bring in the Share Excel information or the table that I have published as a table in my dashboard or as a chart, right? So I can maybe choose a bar chart. So let's say I save. So I will be able to get a bar chart from my Excel data. So this completes the charting capabilities of Curveseries in a way, because now I can have category charting, right? And on top of that, each of the trend can have different chart types very easily, right? And they are very interactive, right? So this is one interesting aspect for getting your Excel tables into charts in your Curveseries platform. Another thing is very powerful concept is you can actually create a new historical chart, add an equation, and then now I can add a Share Excel trend. Why do I need to do that? Because just now if you notice the table that we have published, the DPW demo, has actually 3 time series data sets. So when we do that, we can actually extract one of the time series by just selecting 2 of the columns instead of all the columns. So when you do that, you just need to select the first column as the time, the second column as the value, right? So when you do that, it will create this formula for you, right? And then you can give it a description, right? So I change the start date. So I can extract part of the trend from the table into my chart. So you can see that I have extracted the line of this whole chart as an independent time series, right? So imagine you have 10 tables or 100 tables. You can selectively choose all the different time series from these tables to chart, right? At the same time, this Excel data can work with other data sets like Curveseries data. So for example, let's say I bring in the brand futures data. So now I have a Excel data and my Curveseries data. I can put them onto the same chart, right? And if you observe here, the yearly data from Excel can actually coincide with the daily data of Curveseries. So there's no problem with time axis, right? And then another powerful part is all this data can talk to each other. So you can actually copy and paste the Excel formula, and then I can copy the brand formula. I can edit the equation. I can sum them together without any issues. So one small problem here, because this is a yearly data, you have data points starting from 1st Jan, and there's no prices on 1st Jan for Brent. So this will have some issues, right? So what you can do is you use our plot tool. You can maybe use a formula like fill forward, and then you put your Share Excel formula into parentheses. So this will create a step function. Let's call this demo 2. So when you have a step function of the yearly trend adding to a daily trend, you can create a new trend. So using this, you can easily create your new trend. So the green line is actually the sum of the red line plus blue line, right? So you can see if you have a Share Excel, you can actually use your own data very easily, right? And integrate it with other data sources like Curveseries data, or even with your own Excel data, right? This is a very powerful analytics concept.